Welcome to the Tesla Economist. Please hit the thumbs up and don't forget to subscribe. I'm starting to feel like Tesla is under attack. We do go through these stages with Tesla at times, when one event leads to another, and then the shorters try to take Tesla down further. The FUD gets overly perpetuated, and Tesla's stock price starts to drop. Then psychology kicks in, investors get scared and start to sell too, and down goes the stock even further. Given what Tesla has had thrown at it lately, and on top of that, the actual broad market being down nearly 10% from a few weeks ago too, I actually don't think Tesla is doing that badly. I mean, it could be worse. You could have been holding NIO. That's down over 50% now. That kind of hurts, particularly when it's a company that's a lot harder to understand what's really happening inside. Hey, but for those of you holding NIO, it could be worse too. You could have bought Churchill Capital, aka Lucid. That's down 70% from its high. It's nearly down as much as Nikola from their high. And none of these companies have had relentless FUD thrown at them for the last month. No, Tesla is a solid company now. It's been different in the past, when they were actually close to bankruptcy. I assure you, that was a lot harder to hold back then. You see now, all Tesla have to do is survive, make it long enough until their 4680 production lines are scalable, and then we've seen the profit projection models. We should see likely around 3 times the current stock price when that occurs, as it goes through its next cycle. But Elon says this still may not be for another 18 to 24 months, when 4680 is in mass production. But triple or even double your money in a couple of years is still pretty good. But can Tesla survive that long? Well, considering they make huge profits, then of course. Oh, wait, but that's only because they sell the regulatory credits, right? For a start, so what? Selling regulatory credits looks like a pretty profitable business to me, and growing too, and doesn't appear to be going anywhere anytime soon. Secondly, if you were about to comment about that, I would suggest you read Tesla's financial reports in more depth and understand the difference between things like GAAP profit and non-GAAP profit, rather than just reading headlines. Oh right, and they made these massive profits whilst their most expensive selling models have been out of production for what will be close to half a year. That's impressive, and means Tesla has no problem surviving until the 4680 lines are up. And of course, they have a huge war chest to cover them too. I think it's important to remind ourselves sometimes as to just how profitable this company really is. It kills. But there has been some significant FUD lately, so I thought I would just go through it all with a bit of common sense, looking outside of the narrative the media are currently portraying. I thought we'd start with the China numbers that have been getting everyone stressed. So the China Passenger Car Association, or CPCA, have reported Tesla Chinese sales and production for April. The report stipulates that in April, Tesla made 25,844 cars from China, and 14,174 were exported. The issue is that people seem to think that the exports have detracted from the Chinese numbers. In other words, the FUD going around is that Tesla made around 25,000 cars in April in Shanghai, and 14,000 of those were exported, meaning that only about 11,000 Teslas were sold in China in April. No one seems to have gotten to the bottom of this, and the fact that the doubt has kicked in has clouded people's judgment, with reports like the US-based electric car company sold 25,845 made-in-China vehicles last month, down 27% from 35,478 in March. Now, as Mark Twain said, there's 3 kinds of lies: lies, damned lies, and statistics. For starters, the March figure was total cars produced in China, and the April figure is the number of cars sold in China. They're comparing 2 different numbers. Here is another similar article from CNBC around the same time last year, claiming Model 3 sales have plunged 64%. That was the headline. But it was due to coronavirus lockdown, and we know what happened from there. Even at the current stock price, it's still up 6-fold. So how do I know? Well, it's just common sense, isn't it? Why would Tesla produce or sell 27% less cars when they're in a serious ramping up stage? Model Y production went from 1,600 in January to 4,600 in February and over 10,000 in March. Historically, when Tesla is ramping up, those figures always increase month over month. Therefore, if we add the sold in China numbers with the exported numbers, we get a total of just over 40,000 units. Of that 40,000, if we maintain the Model 3 numbers at 25,000 a month, then that leaves 15,000 Model Ys, or in other words, an additional 5,000 more units than the previous month, consistent with the previous ramping up. If the FUD is implying its production issues, then that would have been some serious downtime, like the entire production, both Model 3 and Model Y down for 2 weeks. If that was the case, we would have no doubt heard something about it. There was a rumour going around, and totally unofficial, that the Model Y was actually down for 2 weeks. But if the production of the Y was down for 2 weeks, then that would have only resulted in perhaps a 7,000 unit discrepancy, not the 15,000 or so we're hearing. In other words, the math for that doesn't check, and the numbers can only be 25,000 or 40,000, not around 32,000, which is what they would have been if that was the case. Plus, in the past, Tesla have never shut down a production line whilst they're ramping up. Okay, and if it did really happen and somehow we are short 15,000 models, maybe due to something like chip shortages, then that's only 1.5% of the projected cars delivered for the year. They still have the demand and production capability, which is the real fundamentals of the business. But as far as I can tell, it just doesn't add up anyway. So if it's not a production issue, then are they trying to imply that it might be a demand issue? In other words, there were 27% less customers in China this month than last? Well, even if that was so, then any extra vehicles could have easily been exported. But given that we hear that Tesla's pre-orders are now nearly up to 3 months for a new 3 or Y in the US, this really is unlikely. At times like these, I look to common sense, statistics, and standard deviations. My basic conclusion is it's just too unlikely the sales would drop so significantly during a major ramp-up. These are just ambiguous numbers that have been purposely inferred to create FUD. And on top of that, we had all those brake failure rumours in China we were hearing about for so long. Again, turned out to all be false. So much so that the Chinese media actually apologised about them. Then we're dealing with the Bitcoin fiasco too. First, Tesla buy Bitcoin, and the market crucifies them for being so ruthless with their capital, despite an enormous billion or so dollars profit within months. Then Tesla stop accepting Bitcoin as payment, and then the Bitcoin community does everything they can to crucify Tesla again. Look, no one knows what Elon is up to with crypto. Elon does now know, however, that he is influential enough to probably pump up any crypto north of a $100 billion valuation just by endorsing it. This might mean he wants to create his own crypto now, or perhaps in association with Tesla. We just don't know. I'm currently still holding my Bitcoin. I don't follow cryptos anything close to the level I do Tesla. I do, however, have a reasonable enough understanding of financial history to know that Bitcoin is the only truly decentralized currency. I'm not prepared to let it go yet. Anyway, this has nothing to do with the company's fundamentals. It's all just a distraction that makes good headlines. And then we also have the tragic incident of the fatal Tesla crash. The entire incident was blamed on Tesla's autopilot, but Elon says it is not possible that autopilot could have been engaged due to the car not travelling on a road that lacked marked lanes, which autopilot requires to work. Then we heard about the Berlin opening, delayed by 6 months. But Elon actually just visited Berlin and seems confident the production will start at the end of this year. Sure, probably not quite as soon as July, like we were expecting, but there's been a lot of bureaucracy to get through in Germany, no surprises. So it's likely going to be delayed somewhat, but it doesn't appear to be close to the extent that it was being made out to be. It was Berlin opening in July that I thought was going to make the stock price recover the soonest. If that's not the case, then it may get a bump from Q2 numbers still, and possibly Q2 earnings, but I can't see it being a major jump. We may have to wait for some Q3 numbers to get the stock price up above 700 or 800 again. With some serious Model S sales in that quarter, it should definitely give it a good push. Of course, the broad market could do anything too, along with other market manipulation. And now we're hearing about a potential logistics issue due to 10,000 cars with a containment hold. But according to inside sources, it doesn't sound overly serious. It also didn't seem to impact the stock price. And now we're just hearing that Michael Burry has a $500 million bet against Tesla, although this is not actually true either. He did not make a bet that substantial. That's just what the current value of the put options are. We don't have details on the actual put options he purchased, such as expiry date or strike price, but considering he purchased around the top of the market, they could have quite easily gone up 400% by now, implying the bet he made was about 1/5 as much as the media are reporting. Again, this news doesn't seem to have affected the stock price either. So for those of you contrary investors out there, the ones that comment about how you're going to buy up Tesla when the stock price hits 100, I would suggest you reassess that target. In all honesty, it's absolutely ridiculous. I think you're lucky enough for it to get this low, to actually have a good chance to get in again. You do have a real chance to get Tesla at a discount right now. $100 just isn't going to happen. I would suggest you watch some of my earlier videos on using modelling to calculate an intrinsic value of Tesla, or you might miss this buying opportunity. And for the rest of you, serious investors, then just hang in there. It's going to take a little while to recover. I think the biggest thing on the horizon right now likely is the opening of Giga Berlin in Texas, but that might not be until Q4 now. On the other hand, you never know what Tesla might announce any other day. Thanks for listening. Please hit the thumbs up and don't forget to subscribe.